Hey, welcome back, everybody. And here we go. So, why does Fed Day matter when interest rates are already lower? What difference does it make? Let's get into that. Let's talk about that. Okay, so a lot of folks are saying, George, come on, man, what the heck? Feds lower rates, mortgage rates go down, everything is good, cats and dogs get along, and that is just not the case. Here's the funny thing. See, the Feds have nothing to do with long-term mortgage rates. Like, they can affect them, but they do not control them. So when we talk about this Wednesday, and this Wednesday is going to be super important. Today happens to be Saturday the 14th, not Friday the 13th. And so when we talk about the actual 18th, which should be Wednesday, if I did my math right here, we should be seeing, and potentially Thursday the 19th, we're going to see a bit of volatility between now and then. And it's super important to understand that sometimes when the Feds talk, rates actually go up and don't come down. Just like everybody's expecting the Fed rates to come down on Wednesday. However, they could very well go up. So if we take a look at this, and it says, basically, Feds meet on Wednesday. And as you can see on our chart there, the highlighted yellow side, that was this time last year mortgage rates. And then, of course, we have the yellow highlighted section this time right now mortgage rates, where we've actually built in part of the actual reduction. And in fact, when we talk about it, it says if Fed funds rate, the things that is being cut on Wednesday, which is a high probability, were the only part of the announcement, a 0.25% cut or a quarter rate cut would likely cause the interest rates to actually move higher, while a 0.5% cut would do the exact opposite. And you might say, what? And you're like, okay, well, my favorite color is plaid, right? Because here's the thing. If they cut it too little, then the perception is that, oh my gosh, I think we're heading into a recession. And that's not necessarily a bad thing for home buyers, because during a recession, like all of them, like almost 100% of them, interest rates have always come down and home prices always shoot up, because that's actually what happens. And then we start to see a market recovery. First time home buyers come in and we start seeing a point, they go from like a 0.25% of the market to like 42% of the market, 43%. And then we see the market shift to where we see the move up buyers come in, and then first-time home buyers slip down, and the move-up buyers then take place. Then our market shift again. We see first-time home buyers come back into it, move-up buyers slipping out, and we head into a recession. No different than what you've been seeing, interestingly enough. Now, when we come back to this, okay, it says the counterpoint to this is investors would worry, just like we said, a 0.25% rate is not a fast enough removal. So, like it says in green, what does it mean? It says, hey, listen, man, we've got some serious volatility that's going to come up, and that is going to be super important, because if they lower it a 0.5 point, that's going to make the stock market investors happier. But, it's a double-edged sword, because then there's others who are going to say, well, hang on a second. What do you think's going on here? And so we're always going to have the naysayers, but the goal is really, if we can get to point or a 0.5 point or 50 basis points of a reduction, that is going to have a massive impact on commercial real estate and a lot of other lending, like your HELOCs go down, your credit card payments go down. There's a lot of benefit to that as they try and balance and shuffle that, hey, let's keep recession out of the conversation. Just saying. All right, let's head back to that. So there's 4 key things we need to keep in mind. So right now, we have the Fed rate cut itself coming on Wednesday. You have the verbiage around the statement of the cut. And that is the biggest thing, because you've heard them say, hey, they say the wrong thing and the market freaks out. And then there we go. Then we have, of course, we have the dot plot. Anybody who's familiar with tracking that knows that the Fed's track that for the future as far as where they're seeing future rate cuts. From there, they go ahead and plot that on a chart. Everybody takes a look at it. And again, because whenever the Feds get together once every 6 weeks, well, sometimes they can turn things upside down. So you have a 50-50 chance come Wednesday, Thursday of the rates either going down or up. And it's going to be an interesting little thing. So mortgage rates, which change every day, Fed rates change once every 6 weeks when they meet. Here's the funny thing, that we could see a different kind of flavor come Wednesday, Thursday with mortgage rates. If they head up, they're going to head up for a little bit. And if they come down, we could very well come into the high fives. And that's going to bring a rush of buyers into the market naturally, because one, we have a little bit more inventory, not a ton, but a little bit. And with rates, people are going to try and lock and tie things up, which makes a lot of sense. So for those of you that are about or on the cusp, on the edge of locking in, then you guys want to truly pay attention come Wednesday. If you are ultra conservative, you may just want to lock. If you are, red or black down at lost wages, or Las Vegas, as some people know it as, hey, wait and see what Wednesday, Thursday rolls out to. I guess we'll find out. We're not going to see a ton of movement downward nonetheless, just because we've already made that change already. So let's take a look at other headlines, which is going to be kind of super important. Upper left, purchase applications respond to another small dip in rate. And in fact, just below that, mortgage rates lowest since February 2023, which is absolutely awesome. Because as you can see, we're at about par pricing today, about 6.14. That is super important, because as we have been continuing to see these rate drops in little packets as they keep coming down, and yes, they pop back up briefly, but they are heading in a downward trend, a lot of what's going on in the economy and whatnot, because remember, mortgage rates are based on what happens in the stock market. All right, so when we pop back again, remember, what will my monthly mortgage payment be? You have a fabulous free, no login, don't have to put any information in. Check how much is, rent versus buy, how much will my mortgage be? When should I refinance? Which is going to be an important calculator for a lot of folks. And then, of course, a multiple calculator option to consider, right? Let's talk about rates again. Look at this. We're at 0.98. We are basically 2 basis points away from a full 1 point reduction year over year. That is a massive thing. And the reason is, again, and why Fed Day, which is on Wednesday, is going to be super critical, is are we going to head up? No, are we going to head down? Or are we going to continue flat? Okay. Depending on what the Feds do, funny enough, if it's a quarter rate, probably rates are going to go up. If it's a half a point, more than likely rates are going to go down. Even though the Feds don't control long-term mortgage rates, they do affect it. And you might say, well, George, they're dropping a quarter of a point. Yeah, that's fine. Rates will probably go up, because they're going to say that they're hedging against potential recession, and that's why they're not going to do that. All right, so let's head back here again. All right, so we pop over, we take a look at what's trending. So we've been seeing an upward trend, which is seasonally normal for on-market time, as far as we're up 6 days still, even the same as last week. So we were at 29, we're at 34 as far as total days on market. And when you take a look at the what's come on market, what's gone off market as far as pending, look, you've got 1,361 homes that came on market. We had 1,377 that actually went off market, meaning that we're seeing for one coming on, one's going off. Pretty straightforward. And Friday being a huge list date, that is a consistent metric to take a look at. During the week, we're seeing a few less coming on market and a few more going off market, and we're seeing some very positive trends, which means that, and some people ask, are we in a more of a balanced market? look, hey, we have half the inventory where we should normally be. We're at like 13,000 and change today. We were at 10,000 last year, and we should be at about 18 to 21,000, depending on the year, as far as overall market. Here's the funny thing, though. Normally 4 to 6 months. So if I have a bucket and all the agents put their listings in this bucket, and we call this bucket the Northwest Multiple Listing Service, the NWMLS. All right, if I put a lid on it, we should have, it used to be 4 to 6 months of inventory in this bucket to sell as a healthy, balanced market. We haven't seen that for over 10 years. We haven't seen that since really 2013, 2012, 2013-ish. So really is 2.5 months the new norm? I think so. Because right now, think about it. We have one property coming on, we have one property going off. We have one coming on, we have one going off. I have 1,377 coming on. I have 1,300 and some odd going off. We're balanced, okay? We're not seeing massive swing either way. And in fact, if we pop back into this, okay, and we take a look at the actual solds are right in there at 916, right? And then we have also about 800 price reductions, which says, hey, sellers missed the market by, 800 people. At least they wised up and realized, hey, we need to do something different. When we blow this up a little bit bigger, it's easier for you guys to see. Look, the numbers are, speak themselves. Each and every week, we go through the running day 7 average, 7-day running average, got that backwards. And you can see this is how we work this out. This is how this is balancing. And we're not seeing really a swing either way. But if we see rates drop down into the 5s, which could happen after Wednesday, then we're going to see actually quite a bit more activity. And what's most important, to make sure if you're interested only in super accurate information that you like and subscribe. That would be super awesome. It helps our algorithm. We truly do appreciate it. All right. Now, when we come over and we take a look at the average price, here's the funny thing. The red is average sold. The green is average list price. So the average list price has been pretty steady all year long, hasn't changed. Year over year for the average sold price, we're down $1,000, but then the list price is also down $1,000. And when we take a look at the month, year over year, same month of September, we're down about $3,000, and we'll probably pop back up again. Pretty normal this time of year to start seeing that number bobble a little bit as we get into our seasonally normal. People spending a little bit more time on last minute vacations, kids getting into school, and more towards October, we start to see a resurgence in activity, right? So when we take a look and if we blow these numbers up, you can see clearly that we're not seeing a massive shift in numbers. In fact, our numbers are really tight, all things considered. And so if we pop over and we take a look at what's going on with just the Northwest MLS for volume, okay, look at this. Look, we're up 0.2 year over year as far as number of homes sold and about 0.5% more homes that have gone pended. When we take a look at what is pended for just the month of September, holy smokes, we're almost 24% higher. And a lot of that is because we've been seeing rates coming down and a lot of people really coming back into the fold because homes are becoming more affordable all the way across. Again, rates have come down enough that we're seeing some really great activity and buyers engaging. But once they hit into the high 5s, that whole game is going to change. We're going to see that pent-up demand really come into the workforce or into the marketplace absolutely super hard. Why? Because everybody's going to want to start securing those rates again. All right. For those looking at refinancing, think, hey, I'll buy a house now to refinance later. Probably look at more of a fix. I don't see them dropping too significantly much in Q4 or Q1 of next year below the mid 5s. That's just my humble opinion. So there you go. Take that for what it's worth. All right, moving on. If we move over and we take a look at new construction, again, look at our numbers here. So We're only down $1,000 as far as the average sales price, the average list price, still plugging along and still heading in an upward trend. $8,000 higher than what we were last week as far as the month of September, as far as an actual sales price, okay? But when we take a look at numbers as far as volume, look, we have pretty much the same numbers as we did last week. And we're up about 3% as far as actual pending. Why? We had a bunch of new homes coming on, newer incentives, and I like to say, that this channel helps some of those folks out. Who knows, right? But anyway, as we take a look at it, new construction is creating some innovative options and whatnot, not necessarily adjusting in price, although we have seen some price adjustments, but we're seeing some really great incentives to entice people to come in and pay that premium for new construction, because there's a ton of I shouldn't say a ton, we have a balanced amount of resales coming on market that is being absorbed one for one every single day. Just saying. All right. So when we pop back in here again, we actually start taking a look at bank owned. Okay. Bank owned. Yeah, we still have our wall of shame. I know. We're only up about 40% on inventory. And, as far as sales and everything else, we are actually down as far as homes available for sale, homes that have gone pending, and homes that have sold. All right. So when everything is really low, everything else is going to, trickle down low anyway. We're not seeing a ton of market, foreclosures on the market. We had one gentleman who responded on the channel and said, hey, next year we're going to see something crazy, So I asked him to defend it, and he didn't, which means that he can't. Because I said, hey, listen, here's my metrics. I've been doing this for 30 years. Please show me your metrics. Show me what you've got. Crickets, man. Why? Not many people can go toe-to-toe with me on metrics. We service our clients super well by doing all of the things that we need to, and that is to educate you on what's going on with the market, what's going on with rates, where are things trending, how can you plan for the next 6 months. That's what this video channel is about. So remember, like, subscribe, make sure that you're doing all the things that you need to do really at the end of the day to make yourself successful. That means, look, ring the bell. Know when these videos are coming on and share this with everybody that that's looking at buying or wanting to make a move. There's no selling. So let them get some really great information so they can make a best decision for them and their families. Anyway, that's it. In the meantime, it is very well outside. Have an absolutely beautiful day. I'll see you on the next video. Take care.